Started. Hello, ladies. Good evening. Good evening. Welcome to Back to School Homeownership Edition webinar where we're going to talk about all things first time home buyer. Oh, we've got people coming in. Awesome. First time home buyer. I don't like to speak a lot, so please allow this to be an interactive conversation. I have no problems with that. You can ask questions along the way, but I will also leave some time at the end if you do have any questions. So let's get started. First things first, let me say welcome and congratulations. Education is the differentiating factor between where you are and where you want to go. And this is one of my favorite quotes, that an investment in knowledge pays the best interest. And considering we're talking about mortgages and credit and building wealth, interest matters, right? And so once the information that you receive here, if you just take one gem, one piece of information and apply it, it will definitely help you move one step closer to your homeownership goal. All right. So congratulations for being here. A little bit about me. For those who don't know me, my name is pronounced Siobhan. I am a mom of one. I'm a mortgage broker, author, financial coach. I've been in the industry for over 20 years, and I'll get into my story in a little bit, but my first transaction with real estate is what led me to become a mortgage agent, ultimately becoming a mortgage broker, and now educating Canadians on how they too can get into the industry. Let me go to the next slide. What do I do as a mortgage broker? So technically, I work for you. I'm an independent, right? I don't work for any one institution. I don't typically work for the lender. We're supposed to represent both, but I'm always all about my people, okay? The banks are looking out for themselves. I'm looking out for you. Why? Because a mortgage is not a one size fits all. It's a very complex product. And if you don't have full information, you might find yourself with a product in a position that may not necessarily help you for years to come. It may get you in the home today, but it may not be the best product. So I personally love to have conversations with my clients. I need to know their short term. I need to know their long-term goals. And again, sometimes you can be in a position today, but you won't be there 3 years from now. So I want to make sure that I'm putting you in a product that is appropriate for where you're going, not just where you are. Okay. I have relationships with all the institutions, banks, credit unions, monolines. Monolines are lenders that work specifically with mortgage brokers. So you can't walk into their branch. You have to go through a mortgage broker to access them. They are regulated just like the banks. So they're very competitive. Their rules and regulations are the same as well, but they give you preference because there's no brick and mortar. They can save some money and make sure that they're giving you the best bang for your mortgage product. All right. I have access to trust companies, mortgage investment companies, private lenders. All of this means to you that you have options. All right. When you are investing in real estate, you're purchasing a property, you're getting a mortgage, which is a hefty loan. You want to make sure that you have access to different options so that we can weigh the pros and cons, meet your short-term and your long-term goals. You don't want to be stuck with a product that is going to be overly expensive or cost you a lot to get out of it should life happen. Okay. Also, working with a mortgage broker, I work with you at any stage of your journey. So from inception, it's just an idea to, okay, Shawana, I have all my docs, I have my savings, I'm ready to go, right? Anywhere along that pendulum, I can work with you. When you go to a lender, typically they only want to see you when you're ready. All right. So this is a visual to give you the actual difference between working with a brokerage broker and working with a bank. And if you see on the right side of your screen, maybe on the left side of yours, you have options, right? And this is just a snapshot of the different types of lenders that I can work with. So if you have top tier credit, if you have solid income, you've been saving for many, many years, right? We start at the top and work our way down. But maybe life happened to you a few years ago and you are in the rebuilding phase, but you would really like to take advantage of where the market is right now and you want to get in, but you may not meet top tier lending guidelines. I have access to different lenders who will consider you in that place too. Where the bank is the bank. The bank can only offer you what they're serving for dinner that night, so to speak, right? So if you don't fit into their little box, your options are very limited. They'll say, come back when you're ready. And so again, when you're making such a large purchase, which will probably be the biggest purchase you'll ever make in your lifetime, unless you're upscaling, right? But buying a home is usually the most expensive thing that you buy. It's always in your best interest to have access to options, okay? Again, to meet your short and your long-term goals. So why do I do what I do as a broker? So this is my mommy. She has 3 children. I'm the eldest, firstborn. She had me when she was 15 years old. And so having a child at 15 years old, you don't really have an option but to pull up your socks and get to work, right? To take care of your child. And so because of that, she, I would say, fell behind on certain things. She wasn't educated in finances. She didn't have a solid job. She had to quit school in order to take care of me. So there was obstacles that she encountered that kind of delayed her wealth journey process. So having the first-hand knowledge of what she did to make sure that we were okay, although it was like we had a great life. I say she did a hands down great job. I saw the struggle. And at a young age, I decided that wasn't the journey that I wanted to take. And her idea of life was really to just go to school, get a good job, and then you work until, you can retire, and then you live off your pension. And so if you know anything about today's economy, you know that that's not enough, right? And so I foresaw that many, many years ago. So I made the decision to leave home, and I knew that I wanted to move, but I didn't know much about anything, right? I didn't know about the real estate market. I didn't even know about how to qualify to rent an apartment. I just knew that if you bought versus you rent, the deciding factor was I'm either going to pay someone else or I'm going to pay myself. That was the only concept that I understood. And so I decided to make my purchase at the age of 23, which was well over 20 years ago. And that opened up my eyes to something, again, that I had no experience of. We grew up in metro housing, right? Although I knew that there were other homes that weren't like ours, I didn't know the difference. And so by purchasing my first home, I was interacted with a mortgage agent, and he came to my house, and it was a very seamless process. So I was intrigued by that. And so a couple of years later, an opportunity presented itself, and I literally quit my job and became a mortgage agent the next day. And so after working in the industry for several years, it was great, right? I was doing it for myself, paying my mortgage, making sure that I was doing what I needed to do to take care of me. I had to go back and get my mom, right? Because again, she didn't have that education. She didn't have that understanding that there was more ways to live life than to just work and pay rent. And so I introduced her to the industry. She purchased her home. That home is the home that she's still in now. She's not as risky as I am, but that's the home that she's in now. And it's catapulted her for her financial future, for retirement. She's a couple years away from retirement now. And now she has her property that she can now leverage to have a more comfortable retirement. All right. I'm also, I said it, the mom of one. And when I had my son, although I was doing this for, everybody else, I did it for my mom, my vision just started to grow, right? And I knew that there were other mothers like my mom, right? Many of my friends were raised by single moms as well. I knew there were people in the community that didn't have access to the information. This is something that we weren't taught at school. This is something that, we only know now based off of the media because they're benefiting from it. But we weren't talking about interest rates and how to make money and how to grow money 20 years ago, right? So my mission to help moms evolved after I had my son. And it's been a mandate for the last 10 plus years, where I'm now committed to helping 1,000 Canadian moms build a solid financial house, because it's not just about buying property, right? You got to manage your money, you got to understand how money works, but then also beginning their journey, because homeownership can truly change your financial future if you get into the right investment. So why I chose real estate, as I said to you, I only had the basic concept. I either paid myself or I paid someone else. But there were some other factors that I learned along the way. Um, Again, investing in somebody else's pocket. As a renter, once you save up all that money, it's a one-time transaction. And then you kind of have to start over again. But now that you're paying rent, it's kind of hard to do both, right? I knew that I wouldn't be living there on my timeline. It could be whenever the landlord decided that they wanted to replace me or move back in or whatever the case is. I wouldn't have that luxury or that security to know that this was my place. And then also restrictive, like you can only do certain things with the property when it doesn't belong to you. Versus being a homeowner, right? Every payment you make, right? Whether that is a monthly payment or if that's a biweekly payment or if that's a weekly payment, you are actually paying yourself. Every payment, you're paying yourself. You're paying down your loan, but you're paying yourself. This is your investment. This is your wealth building journey, right? Aside from paying myself, real estate allows your property to grow at a pace that no other investment will allow your money to grow. And luckily, and some people would say unluckily, where we live, we have a very, very healthy real estate market. So properties have been able to appreciate record highs, right? Excusing the last 3 years, right? Where it's, almost doubled and in some places tripled in value. On average, your real estate property will appreciate anywhere between 5 to 6 or 7%. There's no other investment that's going to give you that return, plus also give you a house. All right. So appreciation, your money is constantly growing and you can see it every single day. I had the option to also make money while I was living in my home, right? There's income potential. When you rent, you can't do that. And of course, I'm a black and white girl. Everything for me is black and white and silver or black and white and gold. I like my place to look a certain way. So I had the freedom to do that as well. So those are some of the basic options that I really had to analyze, and home ownership ultimately was the better choice for me. So we're in school. So I hope you guys have your pen and your paper. Lesson 1 is to set your intention. So I want to know from you, what is your intention? You here to gather the information. Some people are, information hoarders. I don't know, maybe you're just going to take this information and not do anything with it. But I want you to understand how setting an intention is critical to your journey of home ownership, because setting an intention is more than just setting the goal. I've spoken with hundreds and hundreds and hundreds of women and men who say they want to become a homeowner, but haven't done anything. They haven't really set the intention. They just set it, right? It sounds great. It's a goal, right? But when you set the intention, mind, body, and spirit, it allows you to operate in a purposeful manner when you're managing your money, right? So when you set an intention, it's like laying the foundation for what you'd like to have, feel, and experience versus just being a passerby and just watching, real estate market do what it does, right? So I want you to set an intention and be true to yourself, all right? So we got to start with your why. Why do you want to invest in real estate? I gave you all of my reasons. And aside from the money, I want you to dig deep, okay? You're going to dig deep. I'm not sure if anyone has ever done this activity before, but just let's if you guys can come off mute and just give me your first thought, your first answer, and then we'll go to the next slide. Why do you want to invest in real estate?
Security.
Hi, go ahead.
Security.
Security? All right.
Mhm.
Hold on, somebody wrote in the chat. Gifty said stability. All right. Okay. Vanita?
For me, renting is a losing proposition all the way around.
All right. Okay. Anyone else? Hold on. Is there anyone else here? All right.
Build generational wealth, so leaving something behind for my family, my son.
Thank you. All right. So you have your why, your first answer, security, stability. Those are all great answers. But I want to tell you that they're very surface. Okay? They're very, very surface. I came across this exercise called Seven Levels Deep by Dean. No, I was introduced to it by him, but I think he learned it from somebody else. Let me just let you watch the video. I hope this plays. Fingers crossed.
There's a part actually that I wanted to go over in your book called the 7 Levels Deep. Is that what it is?
Yeah.
And this is an exercise that you do, right? And what is this exercise for?
Okay.
And how does it go?
Okay. So 7 Levels Deep was probably the biggest impact, the biggest thing in the impact of my life ever.
Really?
Yeah. One day. So I hired a guy named Joe Stump. Do you know Joe Stump?
No.
Great guy. He's in the marketing world, but I hired him because I want more engagement with my students. So it's all about, if you can get somebody to digest some of your book, if somebody will read 30 pages of your book, they'll read the whole book. How do you get them to the first 30 pages? So I'm always obsessing and trying to create ethical bribes, whatever I can do to get you to take action, right? We know books work. It's the books and the action. So I was always, anyway, so Joe comes in and I said, I want to do whatever I can. And he said, have you ever done the 7 Levels Deep? I don't know where he got it from. This is probably about 8 years ago. She was 2. So about 8 years ago. And I said, well, if it's good, just give it to me.
Right.
I'll take it. I'll take it. And he's like,
We're not hearing anything.
I want to create a company that stands out from everybody else. I want to
For real?
engage more students.
Nobody's hearing? Nobody was hearing? Why you guys didn't tell me? Sorry. So how come that I can hear?
A little bit.
It was
was
playing at first and then it stopped. The sound went away.
There's a part actually that I wanted to go over in your book called the 7 Levels Deep. Is that what it is?
Yeah.
And this is an exercise that you do, right? And
Can you hear it now?
Yes.
Okay, sorry about that.
what is this exercise for? And how does it go?
Digest some of your book. If somebody will read 30 pages of your book, they'll read the whole book. How do you get them to the first 30 pages? So I'm always obsessing and trying to create ethical bribes, whatever I can do to get you to take action, right? We know books work. It's the books and the action. So I was always, anyway, so Joe comes in and I said, I want to do whatever I can. And he said, have you ever done the 7 Levels Deep? I don't know where he got it from. This is probably about 8 years ago. She was 2. So about 8 years ago. And I said, well, if it's good, just give it to me.
Right.
I'll take it. And he's like, I want to go through it with you. I'm like, listen, and I paid Joe 10 grand for half a day of consulting at the time. And he's like, I said, I want to go through. I just want it. He goes, I won't give it to you unless you do it. So we sit there, and what the 7 Levels Deep is finding, everybody wants to know your purpose and what's this meaning of life and what's my why and all that. I get it, and it's kind of played out, but I don't know if anything really gets to the heart of it as simple as this. So what it basically was, he's like, why would you give me 10 grand for half a day? And I said, because I want to create a company that stands out from everybody else. I want to engage more students, change more lives. And he basically said to me, that's a really great answer. So I asked you why I'm here. And you said you want to engage more students and get more people to change their lives. So why is it important for you to engage more students and change people's lives? And I remember saying, there's a lot of people in this industry that shouldn't be here. And there's some great people. I want to help rise all boats of the good and push the rest out. I want to leave a legacy for my kids. So he said, okay, I asked you why you paid me 10 grand. I'm not going to go through this whole thing. And he's like, you did this, you said you wanted to stand out and you wanted to leave a legacy. So why is it important to leave a legacy? And the whole point is asking the previous question 7 times. I took that day. By the time I got to the 3rd question, what happens is when there was 3 questions left, I should say, he asked me 4 times, it switched from my head to my heart. And I felt my physiology change. I felt my emotions change. I felt like tears welling up. And when he asked me, and I don't even remember what the 4th thing I said, but the 3rd thing I said was, I never want to go backwards. And it got me thinking about things I haven't thought about in years.
Wow.
I didn't like being the kid with hand-me-downs, and I'd make my parents drop me off down the street with their junky car, and I'd go to lunch. And this is not a poor me. My life was designed to be exactly the way it was, or I wouldn't be the man or the father I am today. But there was days I'd go to school without lunch money, and I just tell my buddies I'm not hungry because we didn't have a buck, right? So I never want to go back there. And I felt that emotion, and it hit me so hard. I'm like, that's what it is. And he's like, well, there's 2 more left. So he said, Dean, why is it important that you never go backwards? And I'm like, God, I don't know. And it hit me, and I thought, my kids. I I just want to give them options. I don't want to raise entitled kids or brats, but I want to give them options that I didn't have. And I'm like, that's it. So he's like, well, that's not really it, 'cause it's 7. It's not 9. It's not 5. It's 7 levels
Okay.
deep. And by now I'm crying because I'm thinking about my kids,
Sure.
literally. And I got half my staff there, and I'm like just weeping. And it came to me. He said, why is that important? And it just hit me. And I never knew why I worked so hard since I was cutting firewood in high school and did all this stuff. I said, I need to be in control of my life. And these emotions flooded in my parents. Everybody's got their thing, right? But for me, and I'm
Yeah.
saying this because I want you at home to be, or when you're watching this, listen to this. I realized that my parents were married 9 times when I was a kid. So I moved 20 times by the time I was
Wow.
19. Different stepbrothers, stepsisters.
Both parents were married.
5 for my dad,
Wow.
5 for my mom, 4 for my
Oh my
dad.
gosh.
Yeah. Crazy. Always moving. Like military kids know what that feels like, right? So
Wow.
I'd be in a cul-de-sac with a new stepdad, stepbrother, stepsisters, have the bike,
No
come
way.
home one day, and my mom's like, we're moving again. And then I move in with my dad, move in with my grandmother. So I had this crazy
Wow.
hopscotch my whole
There's no
childhood.
certainty.
There was no certainty. So what I realized at that moment, literally, I'm bawling. I mean, like literally crying. It's like, I don't want anybody to ever tell me when to move, how to dress, how to live, how to work, how I'm going to raise my kids. It's definitely not going to kiss somebody's ass for money.
Right.
Right. And I realized at that moment, my why was I don't want to be a control freak. I just want to be in control. When I was 27, I retired both my parents. I stopped worrying about them. I
Wow.
took care of my grandmother. I take care of some, like, so I got those problems out of the way. And when I anchored that in, and you watching at home, it's like, if you think you're watching this because you want to be an entrepreneur, or you already are. If you're watching this, you already had great success in your life. You want that next level, or maybe it's income, or better health, or better diet, or better physiology, whatever it is you want. So many times we think it's because I want to get out of that job. I want this freedom. I just want more money. I want to take the better vacations. And it's 7 times deeper than that.
Mm.
And when you find that, and the reason I know this, not only because it wasn't just transformational to me, is I did live events in Las Vegas for 6 years straight. Every single month, there was 400 people in the room that paid 20 grand to go to
Real estate events, right?
real
Yeah,
estate
at the time,
events.
yeah.
So about 5.5 years, I did them every month in Las Vegas. So once a month, I'd fly in, and that was like the highest level. And every single month, I'd pick somebody out of the audience, and I'd say, come on up, let's do this 7 levels deep. Like, I got it, man. I know what it is. And I'm like, okay, so like, I'm gonna give you a quick example. I won't beat this up, but this is so important.
Yeah.
Because when you feel fatigued, when you want to say no, when you don't want to go to the gym, when you don't want to make that sales call, when you don't want to get your funnel working, when you don't want to start new, when you don't want to say no to someone you should say no to, or say yes to someone else you should say yes to, literally for me still, I fall back on my why. And when I think of my kids and going backwards and being in control, I could push through anything. Nothing will stop me. A bad day, I don't know what it's like to be sick, because my mind, I can program my brain to just power through because I focus foundationally on this why.
Right.
So I remember this guy, he was awesome. This big dude, he had dreadlocks. He was like 6'7". I mean, 6'5". He was huge. This awesome dude. He comes up. He's like, man, they're like, pick me up. He gives me this big hug. He's like, what? So I said, why are you here? He's like, I already know, dude. You're not going to get 7 levels on me. You're not gonna. I've already done the exercise. He says, I'm here because in my neighborhood, there's no dads. There's not enough dads in my neighborhood. I grew up without a dad. These kids need dads. So I'm making money in real estate, and I'm starting this youth group. I already had dad. We get dads together and we go spend these days. He had this amazing story. And I melted on the first one. I said, well, why is that important? He goes, dude, what do you mean, why is that important to you? Of course it's important. And he's laughing, he's joking, and he gives me another reason. I want more money because I want to build a building for it. But I could tell he was still in his head. He gets to number 2 or 1, and everything changed on him. He gets small and he starts crying. I mean, like uncontrollable crying. And he gets to his number 1. He's like, my mom raised a good boy, but when she died 9 years ago, I was a drug addict. And she never saw the man she created. And she said, I'm showing her in heaven what a man I'm saying it right now.
Wow.
Physical good.
Yeah.
He said that. And he said, I'll never stop now. I'll never stop. And again, we all have our own reasons for doing stuff. But when you get to the heart of why you're watching, why you do what you do, it's so much deeper than what you think. And I forget sometimes. I hope I don't sit here and seem like I got my life all figured out. I've been blessed to have I've had more blessings in my life than I ever could imagine. If somebody would have told me at 25, this is where I'd be, I'd say impossible. So I appreciate my blessings, but I'm not perfect at all this stuff. But when I practice these habits, when I think through this, when I recognize my why, the days that I'm off track, the days I think I bit off more than I can chew, or the days where I feel like I plateaued, when I go back to that why, it's like game over. You're not getting in my way. Nothing is.
Wow. You got me emotional. What is the,
All right, ladies. So, hello, everyone there? Did y'all leave me? Hello?
We're
Everybody?
here.
Okay.
We're here.
Still processing. Still
We're 7
processing.
levels deep.
That was good, eh? Like I started to get emotional because I was thinking about the time that I did it. The one time I did it, I probably due to do it again. But real estate is just one aspect of your life for sure. So you can apply this strategy to any area of your life or your life in general. We always have to, one of my coaches used to say, if your why doesn't make you cry, it's not big enough. So we really have to dig within. And as I said, this is just one aspect of your life, but I truly believe that we are the one that are in control of our financial destiny. Right now, the market, the media, right? There's a lot of things that will go against our vision or our goal for home ownership. And sometimes I feel defeated, right? I do. So I have to get back to myself and just remember why I'm actually doing this, because I've experienced what real estate has done for me. I have experienced what it's done for my mom. I've experienced what it's done for so many of my clients. So I want you to take the time to do that assignment, and I will send a template, right? And you want to talk about it, we can talk about it. We can do it together, and really to just dig deep. All right. So that's your homework assignment number 1. All right. Lesson 2. Educate yourself. All right. Wanting to purchase a property is an amazing, amazing goal. It's an amazing intention, but you got to know what you got to do. You got to know what your options are. You got to know how you got to put your ducks in order for you to make the next step towards it, because it is a process, right? So the first thing I always recommend is getting pre-qualified, not even pre-approved, pre-qualified. Knowing where you are currently will be like your starting point, right? What do you call that you put that little pin there? Like you got to know where you are, and we determine what work needs to be done, if any, but you got to know where you're starting from, right? And so it gives you the clarity. We work on what you need to do to get to the next step. It'll also give you an understanding of affordability, because that's the major, major, major hurdle for so many, right? Is affordability. You got to find out if you're financially ready. Homeownership is a great thing, but it is expensive, not only by the price, but even in the carrying cost in order to maintain it, right? I had a client 2 weeks ago. She was coming up for renewal. They've owned the home for about 13 years, but the home is already an older home. So it's about 40, 45 years. And in that 13 years, they hadn't done any upgrades. And so I'm saying to her, well, you're at renewal. Most clients, this is the time that they take advantage of a renewal. So they're not having to pay any penalty to break their mortgage or any cost. They're just going to increase their mortgage amount to leverage the equity so that they can do whatever type of renovations that they need to do to the home in order to maintain it. Because you can have the property, but you also want to keep it up. Oh, geez. You want it to keep up with the market, right? So her property, the range of the neighborhood was around, I think like 845 or 840 to like almost $1 million. And when we did the appraisal, the appraiser said, it's below average condition because they hadn't done any type of renovations or upgrades, because everything deteriorates when you're using it. And she just didn't want to take out any money. But then the lender came back and said, well, she'll need to do the roof in order for us to give her the money, right? And so here we're now in crunch time, and we had to increase the mortgage in order for her to be able to take care of the roof. So I don't even remember why I said that, but knowing the cost of your property is very, very key. If you don't have any your little kitty, your little savings, your little emergency fund, contingency fund, in order to support you along that journey as well too, you can find yourself in financial hardship, and I don't want that for you. All right. So once you've been pre-qualified, right, we also talk about what it will take for you to be approved, right? Lenders have a particular set of standards that they're looking for. Each type of lender, I should say, has a set of standards, but all of them want to know these 3 main things: how much money you're making, what's your credit like, right? And how much debt you have, and how much skin are you bringing to the table, all right? So we're gonna go over income. Income, definitely got to be working, or at least have a solid source of income, which is not like a government funded type of income. Lenders don't like that because they always come in second position to the government, all right? So if you're working, if you're an employee, knowing that you got to have access to a letter of employment, make sure that your pay stubs are up to date. So when you are ready to apply, that it's showing all of your hours. Like, don't send a pay stub that shows, or you've been on vacation or you've been on sick leave, because that will impact your eligibility. Taxes must be up to date, again, because lenders always come in second place to the government, even if they have the mortgage on the property. All right, because if you fall behind on your taxes, the government can always step in and repossess the property, and lenders don't want that. We also want to show your tax assessment to make sure you're not owing the government any money. Down payment, you will require a source of down payment. So whether that's coming from your savings, or I'll go into that in the next one, your savings, we have to show where that money is coming from. All documentation or all down payment needs to be documented. Money laundering apparently is a thing here, so they want to make sure that the funds are yours, or where they're coming from at least. Verification of all credit debts that are reflected on your bureau, and of course ID. Had a client a couple weeks ago who also had an issue with her ID. She only had one piece of ID. We need actually 2 pieces of ID, and health card is not acceptable. So you got to make sure you have your ID. Okay, current, has to be active. If you're in business for self, like a side hustler, right? Documentation is a little bit more hefty. We need your tax T1 generals, because we got to make sure that you are expensing and where your money is going, because we don't use gross, we use net for business for self, because you can make 100,000, right? But you can expense everything and only declare 40. We would have to use 40,000 in order to qualify you for the mortgage. Taxes, again, must be up to date, because you got to make sure you don't owe CRA. Business bank statements would be required to show a consistent income deposit. Client contracts or invoices, also company websites. So we have homeownership. Home-based business is a big thing, but it has to be a legitimate business in order to use the income to qualify. So sometimes lenders will be asking, I can't find this company online. Is it legit, right? So we got to make sure it's a legitimate business. All right. Oh, side note, the more money you make, the more options you have. You'll hear me say this all the time. Sometimes we try to cram our vision or our goal into where we currently are, and that causes a challenge in getting you what you actually want or even need. Your number one goal should always be, aside from home ownership, is to maximize your income potential or income earner. If you're an employee, I don't know, beef up your skills so that you can ask your employer for more money. If you need a side income, if you need a part-time job, sure. I always encourage a home-based business, because you have access to leverage, some tax savings, right? Whatever your goal is, or whatever you want to do, or however you want to do it, your goal should be to earn more income, okay? Your credit. Credit is, a whole conversation on its own, but typically lenders are looking for decent credit, right? 680 is considered top tier, but if you do have a score that's lower than that, that does not exclude you. Again, working with a broker, we have access to all these different lenders who have a lot of common sense type of lending, right? So sometimes your score could be a little bit low or lower, and that's just because of a past incident that you're building your way back up. And as long as we can provide an explanation, that would be satisfactory to them, okay? Credit history. The older your credit, the better, because it shows how you manage your debt over the years. So 2 to 3 years, I think the longer the better, 3 years and up. You got to have at least 2 active accounts, okay? So that could be credit cards, personal loans, car loan. Student loans report on your credit bureau, but they don't necessarily help you with respect to your repayment, right? And showing your responsibility. But if you don't pay it, of course, it'll hurt your credit, all right? Bankruptcy and consumer proposals. You You still have the opportunity to purchase if you've experienced any of these, but we do have to show that there has been some type of reestablishment, meaning an effort to rebuild your credit. A-type lenders are looking for at least 2 years, right? And you will need to have a minimum of 10% down payment. But again, going back to our trust companies and our equity lenders, they're a little bit more flexible. You can lend, they would lend to you the day after you've discharged, or even if you're in a consumer proposal, they would lend to you as long as there's enough equity in there to at least pay you out, okay? With your credit, I want you to also know that you got to stay on top of your credit. Check your credit as frequently as possible. It doesn't hurt you negatively if you pull it yourself. I'm sure you probably get those text messages to say RBC, your RBC account has been locked, or your Scotiabank has been locked, and you don't even bank with them. These crooks do not sleep, okay? So you want to stay on top of your information, one, for fraudulent activity, but two, you want to make sure that everything that you do with your credit is reflected accurately on your credit report, okay? So you can contact we have two major agencies in Canada, Equifax and TransUnion. I personally use Equifax for all of my applications, but check both of them because sometimes the information will be different on both of them, and you want to make sure that they're the same. So if anything is missing, you can always follow up with whomever the information is incorrect and ensure that it gets updated, all right? I also have a link that I will send in an email afterwards that you can pull your own credit through Equifax. It's a newer system where you get the score, you get the full report, and it's almost, not quite, but almost as detailed as the report that I pull when I pull your credit, all right? And it doesn't negatively impact you. Oh, sidebar, debt. So it's kind of like a double-edged sword here. Your credit, you need to use your debt in order to establish your credit. But I want you to also know that having debt can also impact your ability to purchase property, all right? One, interest, you're throwing your money away when you're paying or taking or carrying debt for years and years and years, whether it's credit cards at, 18, 19, 22%, or if it's personal loans at 10%, whatever it is. If there's a way for you to expedite getting rid of your debt, I encourage that. And how do you do that? You organize all your debts. You got to know what your debts are. You got to know how much you owe. You got to know who you owe. You got to know what the interest rate they're charging you, right? You got to be aware of that. I've spoken to so many clients and they'd be like, I think I have 20 something dollars. Like you need to know, because there needs to be a strategy in place. Carrying debt for years on years on years only benefits the bank and doesn't benefit you. Okay. So you're going to assess all of your debt, all of your budget, right? All of your numbers, the numbers matter. And you're going to set a time frame that is manageable in order for you to work on chopping down your debt, right? Because think about it. If it's even $10,000, and so that's at least $300 a month in repayment, that $300 that you're paying towards debt that includes interest could be you investing it into your TFSA or your first home savings account that's working towards getting your home, right? So if you can expedite the debt repayment process, it also opens up buying power, because although you can have debt, we do factor it into your eligibility. The more you have, the less you can be approved for, okay? And so there's two popular ways that you can strategize and pay off your debt. You have the avalanche method and the snowball method. I'm a fan of the snowball method, the snowball effect, because it works based on your psyche. Most of us who have consumer debt, we've spent emotionally. So with the snowball effect, it also works with you emotionally, right? So if you have 3 credit card debts or three debts that you're trying to repay, what you're going to do is you're going to organize those from the smallest debt to the highest debt. And you're going to use any extra money that you have and focus on paying off the smallest debt every single month until that debt is paid off. And then now you only have 2. So once you've accomplished that milestone, you'll feel good about yourself. Be like, wow, right? You'll feel like, yeah, I can do this. So you take the funds that now after that first debt is paid off, you're going to take all that money that you were paying on that debt and roll it over to the next smallest debt. And you just keep going until you're debt free. The avalanche works in the reverse. You are going to, again, organize your debt, and whichever debt you have that's charging you the highest interest, you're going to do the same, right? You're going to make your payments, but you're going to, any extra money that you have, you're going to focus on bringing down that higher interest debt first until it's paid off. And then you roll over that money onto the next one and so forth and so forth. So it's like you're going up versus going down. Okay. Debt, again, is eating away at your ability to build wealth. So if you can, focus on paying off your debt. Work with your creditors to reduce your debts. Sometimes your creditor will offer, the same account that you have or the same card that you have at a lower interest rate, right? They're not going to call you and say, hey, Tanya, we have the same RBC card. I don't like to be calling it RBC because I don't even bank with them, but RBC, and it has an introductory rate at 2%. Would you like it? They will never, ever, 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 ever do that, right? But once you have a debt repayment plan in place, you want to stay on top of it and be proactive. So be sure to check out what their company's offering and see if they can lower your rate, or you can call them and negotiate and say, haggle them. Say, I just got this offer from Scotiabank for da-da-da-da, and see what they can do. All right. Once you've paid off all your debts, I'm going to encourage you to hide or cut up your cards. I typically don't encourage to cut accounts or close accounts, because again, that impacts the length of time that you've had your accounts. All right. And so I put a note here, it's rule of 72. This is the strategy that the banks use to make the money off of you. Right. Client this week, she said in the last year, two of her accounts got increased. One got increased by $4,000 and the other one got increased by $5,000. And she's already used that amount, right? So that's an extra 20%, carrying $9,000 extra per month. However, if she had $9,000 saved in her bank account, I can assure you that the bank is only giving her probably 2%. So what they will do is they will use your money, leverage it to you back on credit, and then charge you a higher interest rate. So by you paying off your debt and getting rid of your debt, you are now becoming your own bank, and you can invest that money, that same money, into a vehicle that's going to pay you a higher interest. Okay. All right. The last thing is your down payment, AKA your equity, right? Remember, you had to come to the table with some skin in the game. What did the bank want to see? They want to see your savings, traditional savings. You can save it in a regular savings, high interest savings, TFSA, GICs, mutual funds, wherever you have your money saved, that's acceptable. Non-traditional savings strategies like PODNA or SUSU is not acceptable by any lender, any tier, A, B, C, D. They don't want to see that. We want to see, everything has to have a paper trail. You can accept a gift from a family member. Family members are very, very limited. Mother, father, brother, sister. All right. The government also has incentive programs to support us in this journey as well, which we're going to go through in the next slide. So you have the home buyers plan, the first time buyer incentive program, first home savings account, which is new. Some municipalities still have affordable home ownership programs where they will give you the down payment, right? You don't need to repay it, but what they do is they secure it against the property. So if you do sell, then you will have to repay them with interest. Okay. There is rent to own. It's a program that I personally am not a fan of, but it's out there. But you have to be very, very, very careful with the companies that you may use, because it's a very expensive program and there's a lot of fine print, and most lenders don't like them. So getting out of it could be tricky. So you got to be very careful of the company that you choose. And then the last one, you can borrow your down payment. Again, it's not something I encourage because it can impact how much money you can borrow. Why? Because if you do borrow it, we have to disclose that to the lender, and that will also add to your liabilities. So that can eat up some of your purchase power as well. And for down payment, the structure right now is, years ago, like a lot of years ago, we used to have 100% financing. We no longer have that. You can put as a minimum of 5% on any purchase that's up to $500,000. Anything that is over the $500,000, you would put the first 5% of the first $500,000, and then anything over that up to just under $1 million, 10% of the difference. So if the property is 600,000, right? 5% of 500,000 would be 25,000, and 10% of 100,000 would be 6,000, right? So you would add the two, and then your down payment would be 31,000. Follow? All right. And anything over $1 million, minimum 20%, because banks cannot get lender insurance. All right. So what qualifies you as a first-time buyer? If you've never owned a property before, you would be considered a first-time home buyer, but there's also extra to that, right? If you have not owned a principal residence 4 years prior to the time that you're applying for the mortgage. So if you apply in 2023, if you have not owned since 2019, then you would technically be qualified as a first-time home buyer. And as a first-time home buyer, then you can access certain of the incentives that are available to you. If you've owned a home, but your spouse has not, then your spouse can purchase or you can purchase together as a first-time home buyer, right? There are some tax implications there where you wouldn't get the full land transfer tax credit, but you would still have access to that. If you were married and had a home and then now are no longer married, then you will also re-qualify as a first-time home buyer. All right. These are all new and over the years. Before it was just if you've never owned before, then you would be considered. So a lot of options for us. Some of the incentives that we do have, a home buyer's tax credit. So if you do purchase up until after December 2022, they increase this claim up to $10,000, in which you don't have to do anything. But when you file your taxes, you let your tax accountant know that you purchased a home, and then you'd be eligible for a tax savings of up to $1,500. All right. The home buyer's plan, which is also known as the RRSP. So if you contribute to your RRSPs, whether that's through work or on your own, and you have up to $35,000, you can withdraw that from the plan to purchase a home, only to purchase a home, to avoid tax implications, right? If you and your partner are purchasing, you can both withdraw and combine a total of up to $70,000 tax-free. You will be required to repay that starting the second year after you've purchased in increments of 1/15 until it's completely paid off. Or if you had the funds, you can recontribute and pay it off that way, right? So yes, you're technically borrowing from yourself, but it is tax-free. If you have a family member or a child that has a disability, the home buyer's plan also allows you to withdraw and buy a home on their behalf without any tax implications, okay? Something I want to ask you too is does your employer offer an RSP match program? I was speaking at an event on Saturday, and this lady shared that match program is what actually got her into a home 10 years ago, because she didn't know that her company offered 50 cents on every dollar that she contributed to her RSP. And so by simply doing that, she shifted from a savings account. Actually, no, she said she shifted from Podna and started saving in her RRSP. And that's what allowed her to, one, build her savings faster, so she was able to withdraw and use her home buyer's plan to purchase her first property. So if you're not contributing, check with your realtor, check with your HR at work and see if they do have that program, and leverage it. All right. That's free money. Okay. First home savings account is something very new. It was launched April of this year. And so it's an account that allows you to save for the purpose of buying your first home. So all the criteria, as I shared before, haven't owned a property before or haven't owned in the last 4 years, this account would be for you. You can be a minimum of 18 years old to a maximum of 71 years old, because there are some restrictions on the account. You can save up to $40,000 in this account, $8,000 per year for 5 years. All right. And after the 5 years, you can keep the funds and have it grow for up to 15 years. After 15 years, you would have to cash out. Why I like this account? It's because you get to use your after tax dollars, right? And save in this account. You allow it to grow, and then the proceeds are not taxable, right? The government wants tax of everything, right? Yeah. So I'm a very big fan of this account. So if you haven't opened this account yet, And even if you're not ready to purchase, please open it before December 31st. And I can assist you with that. Because what happens is, as long as you open it, even if it's on December 30th, if you open it on December 30th, even if it's with $20, $25, you get the full contribution room for 2023. But it allows it to roll over. But if you wait until 2024 when you think you're ready, then you've lost $8,000 worth of investment. So if you open it this year, even if you don't save the $8,000, it gets rolled over on top of the $8,000 for next year. So you have up to $16,000 next year. And so what I also want to stress is that this account is not just a savings account. So it's always best not to go to your bank to open these accounts. It's an investment account. So you want it invested in the market where you can get a higher rate of return on your investment. Okay. And we can go into further details on that on a one-on-one basis. First-time homebuyer incentive program. This is a program that I, again, never really been a fan of, but okay, it was an option. This is where you're going into a partnership with the government. So you have to have a minimum of 5%, and you can purchase a resale or a new construction. If you're purchasing a resale, they will match your 5%. So you have 5, they'll give you 5, and now you're putting down 10% of the purchase price. There are some really weird calculations on how they determine your purchase power, but that is an option. And then if you're purchasing a new construction, they will give you an additional 10%. What this means is that they own shares of the property. So at the time of sale or 25 years, whichever comes sooner, you will have to repay the percentage amount based off of the value, the future value of the property. So although they gave you $25,000, let's say on a $500,000 property, the property is now worth $750,000. You have to pay them back 5% of $700,000, which could be a lot of money. All right. It's out there. I shared it. I don't necessarily like it. Just saying. All right. So those are some of the options that you have available to help you get into the market with respect to your down payment. But who do you need on your team? Aside from me, of course, your mortgage broker, right? This is where you should always go first. When you're thinking about it, you're ready, you're getting pre-qualified, or you're ready to get pre-approved, always seek counsel on your affordability, because that's the determining factor, right? So you want to have a conversation with me first so that you can know your numbers. You'll also need a real estate agent, whether it's a resale or a new construction. As a buyer, there's no cost to you to use the services of a real estate agent. So you want to make sure that you're using somebody that has your best interest at heart, right? Are asking the questions of you and are not just trying to sell you a property, but it's free of cost and they're there to protect your interests. So if I'm selling my property and I'm using a listing agent to sell my property, and you come to look at my property without an agent, my agent can represent you, but he's going to be thinking about me first because he's supposed to get me top dollar, which means you're going to possibly pay more for the property than you really need to. All right. So using a realtor is very, very, it's highly encouraged. Any property that you're purchasing, we always encourage an inspection because, you know, you can have pretty walls, you can have, you know, nice staging, but you want to see behind that. You want to see the roof. You want to see those things. So you want to have an inspector to ensure that there's no hidden issues that's going to cost you later on. Every real estate transaction requires a real estate lawyer because the bank is not going to throw you $500,000 and say, here, give it to the seller, right? All the monies get transferred between lawyers, and the lawyers also do title searches and making sure there's no other liens or anything on the property. They want to make sure that they're registering ownership too, so that you don't have any future issues. So you also need a real estate lawyer. And I always also encourage a financial coach, which is also what I do, or an advisor, because real estate is one piece of your legacy plan, one piece of your wealth building journey. I do believe that you should diversify your investments, but you want to make sure that you have somebody, again, who is looking at the holistic picture of your financial house. All right. And again, most of these services are free as a first timer. All right. So here we are. My word to you is, do not wait to buy real estate. Buy real estate and wait. And I know that we didn't talk about the market because I personally don't like to talk about the market because it's very discouraging. And what happens is people just sit and wait. And being a GTA resident, right? Our market isn't waiting for anybody. So if you are in a position where you can afford to purchase now, 3 months from now, my suggestion is always to go for it. It always depends on your personal finances. How can you manage an investment? And so don't look to the left, don't look to the right. Have a conversation with me, all right? And let's go over your numbers and determine what's best for you, because our market is not waiting for you. If you see in this diagram, over 10 years, like our market literally doubles every 10 years. I purchased, my first purchase was $100,000, a 2-bedroom condo in Toronto. And when I purchased it, it was $100,000. For my presentation on Saturday, I went to look at it and it's now listed today. Same unit for $599,690. That's more than double. And that was 21, 22 years ago. All right. So don't wait to buy real estate, buy real estate and wait. But if you're not ready, don't take this as pressure. I want you to start planning. Okay. Because if you don't plan, then you'll never get there. So lesson 3 is our action plan. If your goal to begin homeownership journey is less than 90 days, I want you to book an appointment today, all right? And get pre-approved, knowing your numbers again. Interest rates have kind of settled for a little bit. Housing prices are starting to come down. The higher the interest rate, the lower the prices. So get in now, right? We don't know what it will be 3 months from now. We just had a bank announcement last week. And so things have kind of simmered and we are entering into the fall market. So if you think you're ready, right? Let's have a conversation. You can go directly to my website and complete the intake form, and I can schedule a call to talk with you today, or not today because working hours are done. But if you're not ready and you're unsure, I'm excited to announce that I am opening cohort 4 of the Mamas on a Mission legacy coaching. And so with this, I work with you for 90 days in getting all your books in order, right? I do a personalized financial health assessment. So we go over your savings, we go over your investments, we go over your budget, right? How are you spending your money? How can we increase your cash flow, right? We go over your credit. We implement that debt repayment strategy, because again, you can have debt, but it is taking away from your ability to build wealth for you and your family. And then we set up savings, right? We find out which account of the accounts that you do have, if any of them are working for you, making sure that they work for you. If not, we can find the better savings account where, as you're making your plan and saving your money, that it's in the right account that's allowing your money to grow faster than it would be in just a regular savings account. And we do this through biweekly calls. Right. I give homework. If you noticed, I give homework. Right. And then we just work together. We work together to set up a plan for you so that you can feel confident in your goal or your journey to homeownership. All right. And so it is for $397. If that is something that is of interest to you, please, I will, you can send me a message right now, but I will also send a follow-up email. Cohort starts at September 1st. I do accept partial payments, so we can definitely have a conversation about that. Okay. But you also have first dibs, knowing that my group coaching program is coming in 2024, January 2024. You can't hear. You guys can't hear? No, sorry, that's an old message. Yes, October 1st. Group coaching is coming in January 2024. This is going to be an experiment. I've been doing one-on-one because I know finance is personal, and so sometimes people feel most comfortable. But my goal is to help 1,000 Canadian moms, and I want to reach them faster. So through the group coaching, we'll be following the same plan, going through your financial house. So it's more of a conversation. You will have access to me, of course, with a call, but it's more of a community, right? I find that people are moving a lot further when they have community. So stay tuned for that. If that's also something that you're interested in, I will be opening the waiting list and keeping you abreast of its progression. All right. All right. So now the floor is open. Does anyone have any questions?
I do about the home savings account. Is it like with a, who's it with? Who does like how do you access that? I know you said make an appointment with you, but who's the bank? Is it with a bank or is it a private lender, like a private bank?
I place my FHSAs through AGF. It's a trust company, an investment company.
Okay. Okay. And is the interest higher there than it would be with a bank?
Because they do invest in the market. So you a split between stocks and mutual funds. So on average, well, FHSA
Uh-huh.
is new, but on our TFSA accounts, our clients are earning an average between 6 and 8%.
Okay. Thank you.
Any other question? Yes, Carlene, you have a question? Can't hear you. Can't hear you. Okay, all right. Any other questions, ladies? Benita?
You mentioned the monolines, and I didn't hear that before, or I don't recall it before. So I guess it's like a online banking type of, you said it wasn't bricks and mortars. So like how safe and secure is it?
They're very secure. Very secure.